Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in this live stream, we're going to start by talking about the US dollar, what the market is doing so far. And as you can see very nicely, price came to our point of interest. The inefficiency mitigated it, took liquidity, and after that, the next thing we saw was an expansion to the upside like we were anticipating. The next run on liquidity will be this low resistance liquidity resting right here. That's the next key level that I'm anticipating to see an expansion to rally above this key level. So we'll go to the weekly time frame, and after this key level, the next run on liquidity is going to be this low resistance liquidity resting right here as well. Now if we look at Aussie dollar, you can basically see what Aussie dollar has been doing so far. And like I said previously, in as much as I'm bullish on Aussie dollar, I'm not going to be buying it from where we are right now, and the reason is because we're at a premium zone. And if I want to buy, I want to buy at a discount zone. And I said previously yesterday that in as much as I'm seeing this impulse move after mitigating this inefficiency, I'm still anticipating to see price come down here. I'm not really going to be surprised to see a displacement to the downside for price to come down in here, because I am absolutely not buying from this key level. I'm not buying from a premium. And there's also no certainty, there's no guarantee that this key level will get mitigated. The only thing there is when we're trading with a strategy. Now we follow our strategy, whatever our strategy is. If we want to see a break of structure, if we want to see a retest at a key level, certain key level, whether it's an inefficiency, whether it's a discount or a premium, we want to see these things before we get into the market. In this case, what I want to see is price coming into a discount zone before I'm looking for a potential entry to buy it to continue higher. And if it doesn't come down there, I'll just be on the sidelines, just like I am right now on Aussie. I still remain very bullish on Aussie. And you can see very nicely, I was talking about this yesterday, a lot of traders are going to be looking at Aussie and they'll be buying from this inefficiency. Stop loss resting right here. They are inducing liquidity. Price could potentially still come down to run that liquidity. And look what happened eventually. Came down, wiped them out. There's still more traders, stop losses resting right here. I'm not going to be surprised this coming week price will still drop to run them out, because this right here, low resistance liquidity. This right here is a low resistance liquidity. Price is inducing more liquidity. You can see 1, 2, 3, inducing more liquidity to the downside. So that being said, I wouldn't really be surprised to see a displacement to the downside on Aussie to run out the sell side liquidity. So that being said, we're going to look at Euro US dollar as well. So for Euro US dollar as well, I'm still bearish now on Euro US dollar on the intraday levels. Overall, I remain bullish, but right now I'm anticipating for a run on sell side liquidities, potentially this sell side liquidity resting right here. And the reason for that is because if we were bullish, this key level right here, if we go to daily time frame, if we were bullish, this key level would have been a strong support zone. I didn't want price to run below this low, but as you can see so far, it's looking more unlikely that it's going to go up. It's looking more likely that this is going to go down than it's going to go up. So personally, I wouldn't be interested in buying it, and I also wouldn't be interested in selling it. And the reason I'm not being interested in selling it is because overall 12-month time frame, I'm bullish, and I'm only going to focus on that, look for opportunity to buy it to continue higher. So that is my analysis on this one. And as you can see so far, how price has consistently been respecting these inefficiencies right from this one here. You can see this inefficiency, mitigated it. After that, we use this inefficiency support. After that, we use this one as resistance, and then we use this one, another resistance. You can see how price is consistently rejecting of these inefficiencies. Came back up, rejected again, came back up to another inefficiency, rejected again, and each time it rejects, it drops below a previous low, breaking structure. Except this one right here, after this mitigation, it didn't break structure, it's only wicked the previous low. But I still want to see a continuous move to the downside on this one. I'm not interested in buying it, neither am I interested in selling it as well. So that is my analysis, and we'll take a look at NZD US dollar. So NZD US dollar, the key level I was anticipating last week, I talked about this inefficiency here, and I said I wouldn't be surprised to see a rejection from here, and price running the sell side liquidity, low resistance liquidity is resting right here. You can basically see how beautiful it is when you understand the area that is a low resistance liquidity, how price easily comes down or rallies above those areas of low resistance liquidity to wipe out those liquidities. Look at it right here. So if you were looking for a sell from here, this is a perfect exit. You look for a sell from here. Let's say this is a daily point of interest. We scale down to 4 hour, and on 4 hour time frame we can see there's an inefficiency. So what we're anticipating to see here is a potential 15-minute shift to market structure. Now we scale down to 15 minutes time frame. We're looking for a break of structure after mitigating that key level, and right here you can see price created a low, created a high, and right here broke structure. So let's say you're not comfortable with this because we want to see a clean break of structure below this wicks. So the one area that I'll confirm a clean break of structure would be this move, because right here this is not a break. We wicked below it, rallied, wicked below it, rallied, came back down, wicked below the previous week. We didn't close any, there was no candle closure. Now we're working with this one. There wasn't a candle closure, wicks, and then eventually this was the candle closure. The moment I see this candle closure, this key level here, I can use this last up move before dropping to break structure. I can use that as my entry, and then I can use the stop loss, the overall high, as my stop loss. So personally, I prefer to use the overall high. That's about 22 pips. I personally prefer about 23 pips. I personally prefer to use the overall high, in as much as you use here or here. But look what happened. If you had used here as a stop loss, price would have taken you out. If you had used here, this would have taken you out. But if you had used this one or this one, you would have been in this trade. You would have been safe in this trade. That is why it's always essential to give your trade some room to do whatever it is it wants to do. So right here would be the take profit position. You can just aim for a 1:2 on this one, and you can see how nicely price delivered to your take profit position. You can see that very clearly, smashed through the take profit position. So personally, I'm not going to be buying NZD US dollar from this key level, and it doesn't really mean that I'm not bullish on it. I'm still very much bullish on NZD US dollar. The only thing I'm watching right here is if we're looking at, so let me show you something very interesting. So if we're looking at the daily structure, we have this high. We have this high right here. So I'll remove this and this. Now we have this high. This is a daily high. This is a daily low, and this is the break of structure. If we look at this, the major down close candle before this expansion to break structure was this key level. This was the major down close candle, took liquidity, rallied to break structure right here. So if I'm looking for a buy, my buy is going to be from that key level. This key level is where I'll confidently look for a buy. Why? Let's scale down. Number one reason, because we do have liquidity. We need liquidity. If price is going to come to any certain position, we need to see liquidity and potentially a low resistance liquidity, just like this one. We need to see this low resistance liquidity there. Now we can spot the low resistance liquidity here. The next thing we do is to anticipate for price to mitigate this key level. Once that happens, we're looking for a shift to market structure. We wait for 15 minutes stroke 30 minutes break of structure. That is what we will be anticipating to see from this key level. So the moment we see that mitigation, we're waiting to see a shift in market structure on the 15 minutes time frame, 30 minutes time frame. Once we see that, we look for a buy to potentially continue higher, and we'll be aiming for this key level right here, inefficiency. So that is my analysis on NZD US dollar. We're going to take a look at for USD card. I said I'm bullish on USD card. I outlined the key level I want to buy from, and right here, this was the key level, and for some reason price came down, close, rallied again. So I'm just not going to do anything unless I see price come down here. That's when I'll be interested in buying USD card. So until then, I'm just going to be on the sidelines, and if it wants to continue higher to rally above the low resistance liquidity, then awesome, so be it. So nothing really much to see here on USD card. So for gold just keeps going back and forth. I'm going to be on the sidelines for this one. I want to see price come down here for an accumulation to continue higher. If not, I'll be on the sidelines. So the next one, we're going to take a look at cryptos. So far, we do have a trade idea on Ethereum, and so far this is the trade. We're still on the trade, both entries and profit. And as you can see, we've not traded stop loss to break even yet, because I still want to see a significant break of structure. And when I say significant break of structure, I mean I want to see a 4-hour break of structure like this one. So I want to see this high get broken. The moment I see price break above this high, then stop loss will be trailed to this position. Both stop losses, first entry stop loss will be traded to this position, second entry stop loss will be traded to this position. So both trades are risk free, and the first one trade in stop loss moved in profit. I'll literally move both stop losses into slight profits, even if it's just very small profit, so that even if it takes us out for any reason, we just don't lose money. We still have made a little bit of money from the trade. So that is what I'm going to do. I'm watching this very closely, and hopefully we could see some level of expansion today on Ethereum. It's been quite a very lethargic price action so far, and this key level right here, this is the key level because we have this previous day's low resting right there. So I was anticipating for price to run out that liquidity resting below the previous day's low. So I'm actually not surprised to see this. I was anticipating this to happen, and eventually if we're going to continue higher, then I'd like to see a continuous move to the upside potentially. So that is what I'm watching for Ethereum, and I'm going to be updating you on whatever I'm doing on Ethereum, whether I'm trailing stop loss to break even, when I'm taking profit, or when I'm closing the trade entirely. I'll share with you all the analysis and whatever I'm doing on it. So that is my analysis on this one, and if you do have any questions, feel free to drop in the chat. The next one we'll look at is Bitcoin. So for Bitcoin has a very weird price action, if I'm honest. I wanted to see Bitcoin come down here, but for some reason it didn't. It just came very close and then reversed, went to the upside, came back down, coming down, back down again. So personally, I was anticipating for it to come here, and then maybe I can look for an entry on Bitcoin as well, but that didn't happen. And I'm just sitting on the sidelines on this one. And if we look at Ethereum against Bitcoin, so Ethereum against Bitcoin seems to have a lot of momentum to go to the upside. It doesn't really have any time to waste. And as you can see, we have this beautiful, juicy, low resistance liquidity resting right here. And any moment from now, I wouldn't be surprised to see an expansion to rally above that low resistance liquidity. And potentially, we still have this inefficiency here calling, attracting price to the upside. I really wouldn't be surprised to see an expansion on Ethereum to rally into this key level. And if we measure from where we are right now to that key level, that's a 16% move to the upside, which can literally happen in a day. So we're watching Ethereum. Hopefully we can see this expansion happen, because we've already seen an expansion. Look at this candle. This up close candle here. That was a 24% move, and after that we saw a slight retracement. So I still want to see a 24% move, and if we look at a 24% move, it's literally a few percentages before we get to this key level. So I'm not going to be surprised to see price come in here. It's a 26% move into this position, just 2% move extra. So I wouldn't be surprised to see price expand exponentially higher to rally into this key level. And if this happens, it just means Ethereum is going to outperform Bitcoin, both in the short term and also in the long term perspective as well. So that is my analysis for Ethereum against Bitcoin. Why we do look at this analysis between Ethereum and Bitcoin is so that we will know which of the two pair is the stronger pair, which one is going to deliver more profit, which one should we trade, which one should we invest our money into. And right now Ethereum is a better investment in my opinion against Bitcoin. So that being said, I'm just going to give for anyone watching right now, I'm just going to give you a bonus. So this is an asset that I'm currently investing in. I'm just putting a little bit of money into this asset. And as you can see, the name is Ichifam. You can go to CoinMarketCap to do more research on it, to understand what the project is all about. So this is the project. So it's just a bonus I'm giving to everyone who tuned in today. So you can see basically it's on red, which means it's massively undervalued, massively at a discount price. It's at a negative 98.59% loss. So which means if you buy it at this price and for any reason it goes to the upside, you're literally, let's say you put $2,000 in this, for example. If this rallies back to the all-time high, your $2,000 will be worth $145,000, which is a lot of money compared to how much you've put into it. Now it's a high risk investment. It can go to zero. There's no guarantee this is gonna go back to all-time high. It's a high risk investment, but if you have like $20 or $200 that you know that you wouldn't really care if it goes to zero, then this is one asset I would put that into. Because if I put in $200 into this and if it goes back to all-time high, my $200 will be worth $14,500. And if it goes to zero, I lose $200. I can't be bothered for losing $200, but it would be nice to make $14,500 with an investment that I put in $200. So this is just the bonus I'm giving to our members that took out time from the busy schedule to tune in today. This is it. We have a weekly high, a weekly low, a break of structure. I wanted to see price mitigate this high. That is where I want to see an accumulation, and very nicely we mitigated it. So if we're going to continue higher, I would expect to see an expansion. And when I talk about an expansion, first thing first, I would like to see 119% move to the upside, and right here, and you can see what's resting around that region. Inefficiency, relative equal high. Perfect. So that is my analysis. That's what I'm watching right now in the marketplace. And if you do have any questions, feel free to drop it in the charts. So let's take a look at Ethereum, see what it's doing. So Ethereum seemed to be rejecting nicely off that inefficiency. So we're just going to be watching it to see what it's going to do. But if there's any updates on the Ethereum trade, I'm going to let you all know. So I appreciate you all for tuning in, and I'll talk to you all in the next live stream. Have an amazing day, everyone.